Welcome back. Happy Friday. This morning, the PCE personal consumption expenditure was reported to have risen 6.3% July from the previous month, 6.8%, representing a slight decline of 0.1% month over month. The PCE personal consumption expenditure measures the price for people pay for goods and services and captures the level of inflation within the economy. It's a little bit different than the PPI or CPI, producer or consumer price index, in the sense that it allows for substitution. For example, if the price of beef becomes too expensive, consumers may switch to chicken, and that certainly will be reflected in the PCE. Now, taking a look at the PCE top right-hand side, we see a long, steady trend to the upside, now flattening, very similar to the consumer price index reported earlier. Long, steady trend to the upside in inflation, now flattening. The question is this flattening the beginning of a reversal or very simply a pause in its way much higher? Earlier this week, the durable goods orders were released, also a long, steady trend to the upside and now flattening. Compare that to the University of Michigan confidence figures, long steady trend to the downside, construction spending turning over. So we see, and New York Empire manufacturing as well, very much a trend to the downside. So we see the inflation numbers have been one of the strongest economic reports we've seen, now somewhat flattening. Now compare that to the CPI, both very strong, but not as strong as last month. The PCE this month, 123, 121. Prior month, a little bit higher. CPI reported earlier, 295, 271, slightly higher the prior month. The same holds true for durable goods. This is a repeating theme that the growth and inflation numbers seem to be very strong, but now somewhat flattening. Manufacturing numbers, confidence numbers like the Michigan figures, those have been very weak, and housing kind of somewhere in the middle between those two categories. Very strong correlations between the PCE and the home price index, consumer price index, negative correlations to existing home sales, but a very strong correlation to durable goods as well, which is, of course, what we expect with strong inflation and growth numbers at the same time. More graphically, or more, I guess with more detail, we can see the PCE, a slight decline this month compared to last month's steady trend or continuation of the steady trend to the upside. CPI looks very similar. Durable goods also looks very similar. Long steady trend to the upside, only a slight decline more recently. Compare that to New York Empire manufacturing, which has been very, very weak. Now, we can see the correlation between durable goods and the PCE, long steady trend to the upside. Now it looks like it's pausing. The PCE compared to CPI, same chart exactly. So with every economic state that we're in, obviously it's driven by different macroeconomic forces, but whatever forces we have right now, it seems to be affecting inflation and growth in one way, manufacturing in quite another. Now, top left-hand side, we see every blue dot represents one stock in the S&P 500. We have 500 dots here. The vast majority of these stocks have an RSI, relative strength index, between 35 to 55. Readings below 30 are considered to be very weak. We're not there yet. So the market's weak, and considering today's big decline, not very weak. On the top right-hand side, we see, with a little bit more detail, we have 127 stocks with an RSI reading between 45 and 50. We have another 114 stocks with an RSI reading between 50 and 55. But we see the readings at 30, almost nothing. We're not yet oversold. The bottom charts represent the 52-week ranges and how every stock falls within its own 52-week range. So, for example, left-hand side, we see all these dots are around the 25, 35, 45 area, but more equally dispersed, showing us that the stocks are not really very, very oversold yet. Bottom right-hand side shows us, of the S&P 500, 60 stocks are trading basically at the 30% level of their 52-week range. So if you imagine a 52-week range of 1 to 100, a lot of these stocks are right around $30 a share, $25 a share, not so many above that range either. If we see a real acceleration to the downside, we may also see new 52-week lows, but we're not there yet. The PCE is also used to calculate our inflation index, the red line, which is a combination really of CPI, PCE, and PPI, our three major inflationary components. Sharp trend to the downside, which we haven't seen at least going back to 2018, 2019. Now, the blue line is a housing market index, still pointing higher, but not relatively as strong as inflation or growth. The green line is a growth index. That's comprised of retail sales, industrial production, durable goods, the more growth-centered, obviously economic reports. That's right near the highs. So we see the real divergence in the economy. Inflation and growth numbers still quite high. Housing, not so much. Manufacturing also, not so much. Now, taking a quick look at the foreign exchange market in the center of the screen, the individual currency with the strongest relative strength is a Thai baht, followed by the Israeli shekel and then the US dollar as well. Bottom of the list is the Turkish lira. When we want to construct a currency pair, we want to try to find that currency that's strongest and match it up against that one that's weakest. So if we were to take a trade going long, let's say the Thai baht versus the Turkish lira, you'd see a very strong trend. Now, of course, it's up to us as traders to determine if this trend will continue or if we're at the point of inflection. We have to, go into a lot more technical analysis to try to get a better gauge on that. But for the time being, we see very strong trends in the Thai baht, also the U.S. dollar. Federal Reserve met earlier today, or Fed chairman at least spoke, and he indicated that higher interest rates are very much, a probability in our future. So as Federal Reserve indicates, that's where the currency usually tends to go. So it'll be interesting to see how next week's numbers play out. If this current divergence of strong inflation, well, I should say strong inflation that's now kind of flattening and strong growth that is kind of flattening, if that continues to remain separate and very far apart in terms of the performance from housing numbers and especially weak confidence and manufacturing numbers. We hope this has been helpful, and we'll see you again soon.